With the Dow dropping this week, I wanted to create a video showcasing an asset investors flock to when there's blood on Wall Street: gold. Its place in finance stretches back thousands of years, and it continues to this day to be one of the most fascinating materials on Earth. Atomic number 79. If we look at gold use around the world, 50% of the supply, you may be surprised to hear, is used for personal jewelry, everything from bracelets, rings, and necklaces. Only about 10% is used in industrials for things like computer chips, dental products, and shielding. The remaining 40% is said to be used as investment or storage of value. You may hear ads for gold pop up on YouTube, and you may also hear from people regarded as experts who promise that gold is the only thing you should own, your gateway to riches. The truth is a lot more complicated than one might think, and in this video we break down gold from many different angles, sourcing quotes from multiple respected investment geniuses. To begin, we have to understand the true rarity of this precious metal. According to many experts around the world, most of the world's gold has already been extracted and sits above ground. At the end of 2006, it was estimated that all the gold ever mined totaled 158,000 tons. That is a lot less than you may think. With such an estimate, every single ounce of gold above the ground on Earth could fit into a cube with size of just 20 meters or 66 feet. Given the huge quantities stored above ground compared to the annual production rates, the price of gold is mainly affected by changes in sentiment, which affects market supply and demand equally, rather than on changes in annual production. This makes it a very unique asset in terms of its pricing, behaving like no other precious metal in existence. Gold mines around the world have supplied the global markets fairly consistently, with yearly production totals barely moving the needle on the overall total supply. The biggest players in the world's gold markets today are, of course, the central banks and other world banking entities such as the International Monetary Fund. These sort of entities are estimated to hold around 40% of the world's gold in reserves and safes around the world. Gold, at the end of the day, is a hedge, a sort of insurance policy against the worst case scenarios, things that you may not believe are even within the realm of possibility. This may sound confusing as currently there is no country on earth that still uses the gold standard. For an example, the US dollar, which prior to the 1970s was pegged to physical gold, is nothing more than a piece of paper today. What gives it value is rather simple: purchasing power, the willingness of others to accept it as a form of trade and commerce. We can go down a philosophical rabbit hole discussing where the US dollar derives its purchasing power from, but ultimately that's the simplistic definition. Without pegging it to a precious metal, a currency is nothing more than a piece of paper whose value is determined by the willingness of others to accept it in trade. The Swiss franc was the last currency in the world to abandon the gold standard in the late 2000s. So why all the gold hoarding by the central banks today? As an example, it's estimated that France has 2,436 tons of gold held in the reserves by its central banking system. Why hold this much? If its currency is not bound to it, why even hold gold? When asked this question, the central banks give a variety of answers, but ultimately it comes down to one thing: crisis management. We hear a wide range of answers and explanations from many different central banking systems stating that gold holdings can be activated in an emergency, a contingency against unforeseen events, a form of insurance, or as the Bank of England has politely stated in the past, a war chest, and the ultimate asset to hold in an emergency. There are several attributes regarding gold that make it a sound asset in a scenario where disaster strikes. No government can issue it, we cannot default on it as it's limited, and most importantly, it's in a sort of fixed state bound by nature itself. Very few, if any, financial instruments hold these characteristics, and for those reasons, governments around the world use gold reserves as a sound investment, ensuring their respective countries against complete socioeconomic collapse, or even more simple things like avoiding inflation. But you, my dear viewer, are not a dictator nor a head of state. You are a simple, hard-working citizen who probably has nowhere near the levels of wealth that nation-states do. For you, gold is not always recommended as a sound investment, which may come as a surprise, especially if you listen to pro-gold investors like Peter Schiff and others who push this agenda non-stop. If you don't believe me, don't take it from me. Take it from the world's most famous, successful investor, Warren Buffett. He does not invest in gold, and we cannot simply attribute this to a dislike of precious metals, as Warren had invested nearly $1 billion in a different metal, silver. Warren has made many statements regarding the metal, including saying it doesn't do anything but sit there and look at you. If we follow simple value investing philosophy, Warren Buffett is absolutely right. Although it has some industrial applications, it is not virtually irreplaceable as silver so often is. Gold makes pretty jewelry, but it is by and large without practical uses. In Buffett's opinion, since it has virtually no inherent value, it is not a good financial asset. Silver, on the other hand, has a myriad of industrial and medical uses. In medicine, silver is used in bandages, catheters, and as a healing agent for burns and other health conditions. It's also used for water. In electronics, silver is the best metal conductor of electricity and doesn't corrode, so it's used extensively in wiring and connective ports, computers, cell phones, and cameras. It's a metal that's difficult to substitute and will most likely continue to play a vital role in industrials. To prove his theory, let's take a person born in 1989, 30 years ago, and assume his or her parents opened an investment account made purely of gold, physical gold, basically gold bars locked up in some sort of safe deposit box. In November of 1989, gold was selling at $480 an ounce. Today, that same investment is worth $1,477. That's a 307% return on your money. That may sound nice, but investing in nearly anything else would have returned much more. Instead of gold, if the parents had invested the same $480 into the S&P 500, it would have netted a return of 810%. For regular middle-class people, large gold investments are not recommended, and we turn to Buffett once again to put this into perspective. From a quote in 2008, he states, "You could take all the gold that's ever been mined and it would fill a cube 67 feet in each direction. For what it's worth at current gold prices, you could buy not some, all of the farmland in the United States. Plus, you can buy 10 Exxon Mobils, plus have 1 trillion of walking around money. Or you could have a big cube of metal. Which would you take? Which is going to produce more value?" For many extremely rich people and nation states, gold basically offers insurance or a hedge for extreme conditions. In those conditions, people like you and I would have much bigger things to worry about. We are essentially doomed in all of those scenarios, and investing in small amounts of gold is not going to save anyone. If we go down the rabbit hole of doomsday scenarios, there is a myriad of problems and other things to consider. For us common folks, there are many other assets that would become much more valuable than a small amount of useless metal. If we look at probability, history, and common sense, for a vast number of people, investing in anything but gold is probably for the best. Governments and other powerful entities have proven throughout history that in the events of collapse or troubles, they will always do everything in their power to maintain a currency and power. It was not that long ago that the US government, the land of the free, a nation who prides itself on individual rights, passed a law confiscating all forms of gold in the US. The Gold Reserve Act of 1934 made the trade and possession of gold a criminal offense for the citizens of the United States. It was not until 1975 that Americans could own or trade gold. This is largely unconstitutional and gave the executive branch the ability and legal right to take all gold that was privately owned and place it straight into the US Treasury. Thank you guys for watching, and please make sure you let me know what your thoughts on gold are and what you think about holding gold as an investment.